Hey everyone, thanks for tuning in. My name is Lili Patch and I'm a real estate pro with Windermere Homes and Estates. And here today with me is Cynthia Solomon. Cynthia is a loan officer with Summit Funding here in San Diego, and she and her team of dream makers are some of the best loan officers around. Their reviews speak for themselves, so please check them out. Now, I've really been looking forward to this interview. As you know, there are a lot of options when it comes to lenders, much like realtors. There are a lot to choose from with different levels of experience and knowledge base. Some do a better job than others with regard to availability and communications. So, or even different programs. It's not one size fits all. So let's dive right in. And thank you for joining me, Cynthia. We've got some questions for you, and why don't we get started with, tell us a little bit about yourself and why you became a mortgage lender.
Absolutely. Hi, everyone. Thanks, Lili. Also excited to be here with you guys today and share a little bit about myself. So I actually fell into the finance world. I moved here from Costa Rica in 2001, and my first job was doing residential lending. I absolutely loved it. I enjoyed chatting with my clients and, like you mentioned, Lili, making their dreams come true. Back then, we did a lot of restructuring of debt back in 2001. Our clients weren't as financially savvy, so we worked very closely with them to help them minimize all of their liabilities, get rid of debt, and more importantly, be able to accomplish either paying off their home sooner or getting funds accessible for their retirement, education, again, just financially putting these individuals in a better position. And I did not know I was going to be a finance major, but as I've kind of found myself in my younger path, looking at what I wanted to do, I enjoyed being able to coach and guide and be part of that journey with our clients. It's an amazing feeling when you sit down in front of someone and you are able to free up $500, $600 and utilize that to pay down their mortgage quicker. Instead of doing a 30-year, now you have given this client the option of being able to be debt-free in 15 years. Or now they can have $500 that they need to put their child to college, whatever their goal and mission was. We're really passionate about being able to take that journey, especially with first-time home buyers. There's a lot of anxiety, there's a lot of questions, there's a lot of lack of knowledge of what's available. And in the industry itself, there's a lot of people out there, and we feel like knowledge is power, and being able to educate these individuals has been part of our journey. I did leave residential lending for a while, found myself working closely with business owners, and enjoyed that part of the world, and found that these individuals also had some needs where a lot of the lenders out there weren't able to assist them, being able to deal with more complex financials, look at different tax returns, different entities, and be able to allocate the correct income so that they can go in and, again, diversify their portfolio, buy a new home, upgrade, whatever their mission was. Being able to take that journey with them in the system has been quite enjoyable. It's been very crazy over the last year. It's been a crazy market, both on the refinance side with the boom and current affordability on interest rates. And as you know, Lili, with the housing market, it's just very competitive out there. So being able to make our offers outstanding, have a gap strategy in the event that there's a difference in appraised value versus purchase price, and having plan A, B, and C so that these individuals can still get into this home and not worry about their offer being accepted has been one of our biggest takes recently.
I really appreciate you mentioning that, because as a realtor, especially, most of these transactions happen on the weekend, right? And I need you right away. So I really appreciate that. And it's funny because one of the things that I thought was interesting and a little humorous on your little profile, on your about comments, and I loved it. It said purchasing a home can be exciting and joyful and scary and confusing, but that's where the team comes in. And this is where I got the dream makers. Call us dream makers, call us loan officers, call us when you're in a panic. We're there to help. And I thought that was quite witty. So good job on that. That was good. And you're right. There are times, especially, in this field, where we're always competing with could be 10, 15, 20 other offers. It's super important that we have that communication and that you're easily accessible and that you're responsive, even on the off hours, which, I mean, that comes with what we do. It's just part of the job. And so I appreciate that you do that. I think it's vitally important, especially for first-time home buyers. And so what advice would you give to first-time home buyers, especially, now in this market?
So obviously being prepared, whether you are ready to purchase today or in a year or 2 years, being able to go through that approval and having the information in front of you. So a lot of our first-time home buyers thought that they wouldn't be able to qualify. They thought that, purchasing a home, it's this hidden financial option that it's just not something feasible today. So getting pre-approved is most important. Finding out what you need, finding out where am I? Can I purchase a home? Can I put myself in a better financial position today? What can I do to qualify later? We talked to a lot of clients who thought that, they had to wait a year before they would be ready to buy. They were in a perfect position. More importantly, we walked them through the financial aspect of owning a home, the cost of rent, the cost of waiting. Currently, if you notice, the market has been going quite quickly and appreciation is unbelievable. Of course, we don't expect this to be supported long-term, but looking at what they're paying for rent in comparison to a mortgage. My number one recommendation for a first-time home buyer is to start the process sooner rather than later. Whether they want to do this today, tomorrow, or in 6 months, there's always the prices, there's always ways that they can improve, whether they're in a perfect position today. Hey, there might be things we recommend that it's just going to put them in a better financial position in the long term. I think that being aware of what the process is will take away that anxiety, will take away that scary part of the process in itself, and then you can truly enjoy it. You want to work with a team that really is accessible and is able to educate you and that you feel like they got your back. As you mentioned, it's a very stressful process. It's very competitive. So time urgency is key right now in order to get those offers accepted. And being able to reach your loan officer and say, hey, what if? And then have them kind of walk you through what that looks like. I always tell my clients, when you buy a home, it's kind of when you jump on a plane. You know that your pilot's going to get you from point A to point B. You don't know if there's going to be any turbulence during that ride. Pilot's job and the entire crew is to make sure that that ride is going to be as smooth as possible and that they got you safe to your final destination. So I kind of correlate that to the loan process. We might have unexpected challenges, but if you have a team that's done their job properly, they've been very diligent, they've done their work, they're going to be able to resolve whatever challenge comes up, and they're going to be honest with you. I think being able to have a team that you can go back and look at what they've done for you over the time life of their home buying experience and have their friends and family referred to them is extremely important, because you're doing a good job. You know that they can trust you, know that that entire journey, as crazy as it could be, was taken care of, and that experience, hopefully was not one that you'll remember negatively. It's one that you're going to enjoy. It's your first home. You're going to feel comfortable with your payments. You know that you got this. You're not going to worry about not being able to make that mortgage, more importantly.
I agree. And I love that analogy, because I think, again, you're spending a lot of money, especially in California, where the median home price is $500,000 or more, so it's definitely not something that's taken lightly. And then, of course, you have a lot of buyers in a panic simply because of where the market is right now. Am I overpaying? Am I buying at the wrong time? So reassuring them that nobody has a crystal ball and that they're owning property and that this is an investment in themselves, I think is huge. And being able to answer those questions and just give them that reassurance. So
Yeah, we walk them through, you're investing in your future. Right now, you're paying rent to your landlord. What would that do for you? If you were to put, let's say you had $100,000 that you put in the stock market, think about it this way. Now you purchase a home, you mentioned $500,000 average price here in San Diego. What does that do for you in appreciation when you're earning equity on that home at maybe a 30% depreciation over the last year over that $500,000? That is a nice chunk of funds that you're going to put towards your retirement. Plus, you can capitalize your property. So there's a lot of value in that, and we walk them through that. We can show them financially, where they're at today with their rent, what that could do for a mortgage, and we do walk them through a wheel of wealth. We don't want them to be house poor. We want to ensure that they feel comfortable with their payment and that they can continue to accomplish their goals for life, whether that's vacationing, dining out, enjoy outings with the kids and family. So we will walk them through what the underwriter looks at for the approval and what comfort level we have as far as the maximum purchasing power that a lender is going to provide for them, that we will have an educated conversation as to what fits best for them financially, what makes more sense.
Excellent. So this leads me kind of into my next question, because different lenders have different programs that they can offer. Not everybody has $50,000 that they can drop as a down payment, or like I said, everybody has different financial needs and circumstances. So are there any programs that your company offers that would be beneficial to home buyers right now in this market, or maybe that other lenders don't offer? Assistant, like down payment assistance, any programs that you feel have really stuck out in this time?
So, most lenders are going to be pretty parallel as far as what they can offer. We all are, if we're a direct lender, we're going to meet Fannie Mae, Freddie Mac, Ginnie Mae guidelines. But you would be surprised that you can come in with as little as 3% down on a home. And there are, down payment assistance programs available, and we are happy to educate them about the different programs out there, show them the value of doing one versus the other. Again, have that informed conversation. There's going to be pros and cons and going one way or the other. More importantly, like you mentioned, it's really knowing the facts and being able to have the information that you need to make a smart financial decision. When I moved to the US, I did not have any credit. I did not have any funds to put down towards down payment, but I was savvy enough and I knew that I did not want to be paying rent too long because I was just giving my money away. I knew I wanted to be here long term, so I got in front of someone that educated me, someone that was an expert in that field and provided me with good guidance and advice. I was able to save, our first funds for down payment, and we were able to get into our first condo. So something you want to remember too is your first home does not have to be your last home. You are getting into the market, and it's a great way to be able to start earning equity. So you might start small, and from there, hopefully you have some appreciation down the road. Now you turn that sale of that property, whatever equity we have from that, and we upgrade. As far as the programs that we might have available for our clients, I think the biggest component that Summit's going to bring to the picture will be that our underlying guidelines in comparison to some of the other institutions will mirror those of Fannie Mae and Freddie Mac. And for our clients, what that means is we're going to have less underwriting criteria. So our FICO scores might not be as strict. Our debt to income ratios, we are able to go to higher amounts in the event that we do have maybe some outstanding liabilities, and we're working on that. Again, 3% down for conventional programs. We are able to come in the event that we have to go FHA route if we have a challenge on credit or we need that extra little DTI space that's allowed through an FHA program. We can do that. If you are part of a tribe, we do have Section 184 loans, and they do come with some down payment assistance as well from the tribe. So we'll work with them. We work with Chinoa Fund. We work with San Diego Housing Authority for down payment programs. So there are options out there. Most important thing is to get with someone that you trust, that you know that will provide you with that guidance, that information, that data, so that you can, again, make an informed decision and decide when the time is right.
That's great. So a couple of things you said I want to just touch on real quick. By the way, that's music to my ears when I hear, the underwriting part. So one of the things that you mentioned that a lot of people may or may not know is the difference between a direct lender and a broker. So now you do both or no?
We do.
You
So
do.
we are a hybrid model, which is fantastic. My entire career path had been working with large science institutions, fantastic institutions, but they are going to have their own criteria of what they feel comfortable as far as taking a risk. Typically, they're going to be more conservative. Because we are a direct lender to Fannie Mae, Freddie Mac, Ginnie Mae, government agencies that purchase these loans on the conforming side here in San Diego, up to about $753, $250 purchase price for a single family residence. All of these loans are being sold. And what that means is the rights of servicing these loans are being sold to the Fannie Mae, Ginnie Mae, Freddie Mac, agencies that will be able to pretty much purchase this home loan that we are doing for you today. They will put it in the market, and that drives interest rates as well. So because we are a direct lender, we hedge our own funds. It allows us to be very competitive in the industry. And we do have the flexibility of pretty much saying, hey, we're okay with using your offer letter. We don't need to wait for your pay stub. We have a contract in place. We can proceed. Or, hey, we feel okay with a 600 FICO, 580 FICO, depending on the program that we're looking at. We don't have a problem. Some institutions might have their own underlying guideline where they say, okay, well, we're not going to work with a client that has a FICO score under 620. It's just not our cup of tea. We don't have an appetite for that. Because we are a direct lender, we have pretty much, if you think about it again, I love analogies. If you go out fishing, our net's going to be wider. You'll be able to catch more fish. You're going to have more options available. And for you, that means that, we're going to price all of the different programs available. There's special programs for limited income. Fannie Mae, Freddie Mac, they both have their Home Possible, home ready programs that you can qualify for if you have good credit and you meet a certain income criteria. That's going to allow you to have a more comfortable payment. And that's going to bump up your purchasing price, which right now is extremely important. With the pricing being obviously quite high, you'll be able to go and purchase the home that you had your eyes on. For example, if you through another institution only qualified for a $500,000 purchase price, because we have access to these additional programs and we are aware of what's available and how to properly cash flow you. If you have student loans, if you have debts, there's different techniques that can be utilized that Fannie Mae and Freddie Mac allow us to, in which we can work with your debt to income ratios to qualify you. So if you have a savvy lender, they're going to be able to take advantage of all of these different unique niches within the industry to be able to provide you with the best program out there, the best payments, and more importantly, that purchasing power that you want. Because again, we can be a hybrid. We are able to also go out and shop for the best program available for your home loan. We do have what's called non-qualified mortgages, and we try to stay away from them because they're going to have higher interest rates. Bank statement programs, they're a little bit more clutchy in that sense, and you're going to pay a higher interest rate for it. So we try to go the conventional or the jumbo route. What that means is on the jumbo side, we have different investors we work with. Each investor is going to have their own appetite for our client. We're going to see who's going to give us the best pricing and who's going to have a better appetite for this loan. And it can go as easily as one investor is going to approve us based on the type of income that we have. And here we have this other investor that's not going to be okay moving forward because we might have capital gains. We might have income that's not W-2 and they just don't like that. Each investor is going to have their own little debt to income ratios, reserves requirements, credit requirement. So we do have the capability of knowing who's going to be best for the specific loan and how to structure that properly. When it comes to those higher loan amounts, any home here in San Diego, we're looking at unfortunately a higher purchase price. We can structure it as an 80-10-10. We can structure it in many different ways, and we will find out financially what's going to make more sense. And approval wise, how do we get this pushed through underwriting?
Excellent.
If you look at, just one last comment on here, if we look at our approval rates, Summit as a whole, from the loans that we submit into underwriting, 97% of our loans get approved. And that's not only because obviously we have a really good team on the front end that's going to ensure that when we submit a package into underwriting, it's a complete package. There are no questions, but we have open communication with our underwriters. We have a team that we work with closely, so they get to know us, they get to know who we are as an individual, our reputation. And I think it's very important, you know, coming from the banking world where you escalate corporate ladders, there's a sense of urgency that's lost as well as in translation. We have the capability of having direct communication with our underwriters, so there are no questions being asked that are not properly answered. A lot of times there's confusion, and when you are escalating requests and you don't have access to that decision maker, the information might not be translated accordingly. And that can lead to a decline versus if they understood their income and they understood exactly maybe why there was a gap in unemployment or why we have, you know, question being asked, that can make a whole difference in the file between the decline and the approval.
No, I agree. A lot of the times questions get overlooked and then you end up in a bit of a quagmire down the road. So I totally understand that. So, and you mentioned something real quick. I just wanted to touch on it. Maybe I want to make sure I didn't mishear you. Do you do conventional products with 3%?
3% down, yes.
Really?
As little as 3% down.
Okay, I knew 5, but 3 was a surprise. That's good. That's really good.
Fantastic, yes.
Yeah, especially, you know, a lot of people don't know if you're buying a condo, it has to be, if you're going the FHA route, that has to go through an approval process. And if it's not FHA or VA approved, then that's out. So if you can do that same loan on a conventional and not be limited, that's pretty huge.
It's fantastic. And again, it's going to provide the client with options. Something really important that you just mentioned, if it's not VA or FHA approved, we are able to work with that HOA association to get them in that VA and FHA approval list.
Yeah.
It takes about 30 days. So, you know, if we're looking to close quickly, we might request an extension. It takes about 30 days to get a condo community approved through VA or FHA. But right, we are able to look into that. It's not always a yes, but usually we're very successful at it.
Yeah, that's good. That's really good. And so you've given us so much information. I love that you help people plan, you know, ahead of time, how to get to where they want to be goal-wise and to get into their home, because that's really important. Financial planning sometimes goes to the wayside. So Cynthia, thank you so much for sitting down and being interviewed today. It's been great to learn about what you offer and your business. And I'm excited about where it's headed.
I really appreciate your time. And, you know, this is a fun adventure for us. We really enjoy being able to share a little bit about our path with lending. It's always intriguing. Each file is unique, and we always try to make it so that we're providing, you know, best expertise, best knowledge, and most importantly, that our client is fully aware of their payment and have full transparency. Yeah, we feel like being able to provide them that knowledge is key, and preparing ahead of time is very important so that they can put themselves in a better financial, whether it's today, tomorrow, or in 2 years.
Excellent. Excellent. And for our audience, thanks so much for watching. Once again, I'm Lili Patch, real estate pro here in San Diego with Windermere Homes and Estates. And if you have a business and would like to be featured, reach out to me via the contact button on my website or on our Park Bench website. And we'll see you on the next episode. In the meantime, be sure to visit Cynthia Solomon and Summit Funding. I'm going to give you her website. It's summitfunding.net/C Solomon. And they're an amazing asset to our community. And they're going to be an amazing asset to your first purchase on your first home. And always remember to shop local. And bye for now.